Good morning. Good morning, Dr. Paulinus. Good morning, Mr. Emmanuel Olalekan. Good morning to every participant we have here right now while we wait for others to join us. I believe you can hear me. Just to be sure we can hear
Yes, we
me.
can. Yes.
Okay, thank you very much. My name is Barrister Emmanuel, and welcome once again to CPS LLP, that's Cardinal Professional Services webinar series. And I'm certain this is the first time you are joining us like this on the webinar series. This is our first session, and we'll be having more of this webinar series. So before I go further, today we'll be talking about transfer pricing in Nigeria, just like you've seen in our mails, just like you saw when you tried to register for this webinar. We'll be talking about transfer pricing in Nigeria, and our focus will be understanding the landscape and compliance requirements of transfer pricing in Nigeria. In this webinar today, we'll be discussing the Nigerian transfer pricing regime, the compliance obligations, consequence of non-compliance. We'll also be talking about the financial information and accounts to be disclosed to the tax authorities. That is why we have our distinguished Dr. Paulinus Iyika here from the Federal Inland Revenue Service, who will be introducing very, very soon. Just stay with us. We'll also be addressing some challenges. We've had a wave of several questions and challenges that are being discussed with the migration to the Tax Promax platform. From the platform, we naturally or usually our transfer pricing. So we'll be discussing those challenges that participants might have faced or companies are currently facing. We'll also be sharing tips on how we can best maximize our grace period. Just a reminder that there was a grace period that was given to us all to file our transfer pricing account and information on the Tax Promax platform. So we'll be talking about how best we can enjoy this grace period to our own benefit. So we'd like you to know that, okay, I want to be sure that our QR code is still on the screen. I want to be certain it's still on the screen. Okay. So before I go further, I would like you to scan the QR code you can see on the screen so you can follow us on our social media platforms. Okay, yes, it's coming up very soon. Yes. So the same QR code you can see on the screen right now, please scan the QR code so you can follow us on our platforms, on every social media platform, LinkedIn, our channel. So please scan the QR code. Okay. So I want to be sure that more participants are joining us as we go further. Would also like to let you know that we'll be taking questions. We already gathered some questions during the registration. The same questions you imputed while you were registering. We gathered the questions and would also be taking live questions along the line after our panel session. We'll be taking the questions. However, if there are questions we're not able to take during this webinar series, trust us, we would attend to those questions. One of the reasons we want you to join us on our social media platforms so we can address those questions in our channel. Okay, so we have our distinguished lead partner in the house, Emmanuel Olalekan. That's a lead partner for Cardinal Professional Services. We have him in the house. But before we go further, I want to be sure that you're actually scanning the QR code on your screen. If you have any difficulty while you're trying to scan, while you're trying to follow us, please let us know and we'll work on it. Thank you so much. I believe you can still hear me. Just to confirm that we can still hear me. Okay, I can see Edna. I believe you can still hear me. So I would like to let us know that this webinar session is not just going to be like any webinar session. It's going to be very insightful. I mean, transfer pricing has looked like a subject matter or a topic that seems strange, but it's a necessary evil, let me say that word, that seems strange to corporate bodies or even practitioners. So this moment, we are going to be dissecting it, we are going to be talking about it, and we are going to be making it clear to us so that everything that seems so not clear to us will be clear. And we will be having a presentation from our lead partner, Emmanuel Olalekan, very soon, who will be helping us dissect the subject matter before we go into our panel session that will be having questions and answers and a little introduction to transfer pricing. So I believe we can go into the session. I would just like a confirmation if we're okay. So Emmanuel Olalekan is ready for us. And please, I would beg us to pay utmost attention to this session because there's a lot we would glean from this session. So please pay utmost attention because this is one of the reasons why we are here today. Thank you so much. So I think I would give the floor to Emmanuel Olalekan to take us on a short presentation. Thank you.
Oh, thank you very much, Anolo. Thank you for that intro. I want to also appreciate our panelist, Dr. Paulinus, for making our time to be part of this interaction. He has always been very supportive when it comes to this transfer pricing subject. Way back, your contribution in the landscape has been very rewarding. Thank you for making our time to be part of this conversation. I also want to appreciate all our audience that are currently connected, to this conversation. It will not be appropriate, if we don't set the context for the conversation today. So what I'm doing, in the next 15 to 20 minutes is to set the proper context for the conversation that we will be having. And I just want to, for the benefit of those people that may not be familiar with the transfer pricing concept, and also, how it plays out in the Nigerian, space. We want to discuss some, basic understanding. I promise you that I will not delve into the jargons. I will leave the jargons to Dr. Paulinus to handle. I will make it as simple as practical, so that we all can follow the interaction today. So my presentation is slightly in line with the topic for the day, understanding the Nigeria transfer pricing landscape and the compliance requirements. If I can quickly, move to the next slide, at the end of this presentation, I believe that we must have understood the basis, for transfer pricing and the compliance regulations, in Nigeria. Also, at the end of this presentation, you should have an appreciation of what are the compliance requirements, the penalty for non-compliance. And lastly, I will also speak to, the new transfer pricing filing platform, which is the TAS Pro Max. And let me dive deep. You can see a big pizza in front of you for pizza lovers. I try as much as possible to make this presentation, very practical. You know, if you look at this pizza, every slice of pizza, just like you and with your family, your children, and you bought a very big pizza, either from Domino's or from Debonair's or whichever pizza you love the most, you know, and you guys are ensuring that everybody gets their slice of the pizza, you know, and that is exactly, you know, what in a nutshell, what the whole conversation about transfer pricing is all about. You will agree with me that, you know, businesses, you know, have extended beyond doing business in one location. You know, you have multinational enterprises, you know, operating across the globe. A big example is, you know, the Coca-Cola, that is an household name. You also appreciate, you know, Facebook spreading its tentacles across the globe and earning revenue all over the globe. And we have other, you know, manufacturing, technology, you know, educational concerns like that have expressions, you know, in multi-jurisdiction. And the fact that, you know, the tax law across countries are not the same, you know, and different countries have their different tax laws or tax codes. That brings to the table the conversation that, you know, there may be potential arbitrage. For example, in Nigeria, our tax rate is effectively 32% if you had education tax, you know, and if you look at another claim, the tax rate could be higher or the tax rate could be lower. You know, if you look at the tax-friendly zone, the Bahamas, the Isle of Man, you know, their tax rates are typically lower. And what the subject of transfer pricing, you know, is trying to address is to say that, look, as much as, you know, different tax laws applies in different countries, you know, multinational organizations, even domestic groups, you know, are doing business with their subsidiaries or their related parties or their connected persons, you know, in a manner that will not lead to you cheating me. You know, instead of you allowing me to take my slice of the pizza, you know, you are taking my whole slice of the pizza and you are adding it to your home. Let me paint a picture that will help us, you know, understand this concept very well. So you have a multinational enterprises somewhere in the US and you have a subsidiary here in Nigeria. So the best way to understand this pizza concept is that, you know, look at the global profit of that, you know, multinational enterprises and say the global profit of that multinational enterprises is this pizza that you are seeing, you know, on the screen, you know, and out of that profit, that global profit, you know, there is a Nigerian entity here. You can see the Nigerian flag that is operating out of Nigeria, you know, and is supposed to report its profit in Nigeria for the purpose of taxing that profit, you know, in Nigeria. But, you know, if the Nigerian government is not careful, especially the Federal Inland Revenue, you know, there's a way the multinational organization can arrange, you know, their interaction with the Nigerian entity, you know, by putting some transaction in place, you know, doing one or two more support, or in some instances, you know, outrightly, you know, putting scheme in place to move the profit of the Nigerian entity out of Nigeria to another location where it will suffer, you know, less tax. But the Nigerian government is not saying that, no. It's not only Nigerian government, even the government of the world, you know, globally, you know, at the United Nations level, OECD, you know, they said, no, that should not be the case. Let us look for a principle. Let's look for a taxation nexus that will enable, you know, profits to be retained where they are earned. You know, in quotes, let Nigeria has a share of the pizza. You know, don't take Nigeria's slice of the pizza and add it to your own somewhere, maybe in Bahamas or somewhere maybe in Panama. In the same vein, you know, US also will be striving and say, hope that Nigerian entity, you know, is not taking any profit that is supposed to be reported, you know, in US down to Nigeria. So the subject of transfer pricing is never a unilateral conversation, you know, and that is the very first point that you need to note, that it is never a unilateral conversation. It is always at the minimum, a two-edged sword or a multi-edged sword, you know, where you have multiple, you know, people participating in the share of the global profit of that multinational enterprises. Someone may be asking and say, okay, yeah, I understand about multinational enterprises. What about domestic group? And you will also agree with me, for example, in a developing economy like Nigeria, where, we have tax incentive, tax holidays, and different tax rates, applicable to different businesses in Nigeria. There are incentive for domestic group to even move profit around each other for the purpose of, not, exposing the group, to higher taxes, and because government of the world, is interested in getting tax for the purpose of governance, the transfer pricing, the rules came in for the purpose of ensuring that the profit of a company is retained where the economic activity is performed. Having said that, providing a background context to all of these, let's attempt to define what transfer pricing is, for the very people that are academic, in the room. Oh, I just want to go on with the definition of what transfer pricing is. So let's attempt to define it. On my screen, I have it that, transfer pricing is a branch of international taxation, seeking to ensure that tax benefits are retained where the economic activities are performed, aligning risk and returns, and it is largely established on the arm's length principle. So if you are pursuing a career in transfer pricing, you want to be a transfer pricing expert, what you are simply saying is that you want to delve into the field of international taxation. I think myself and Dr. Paulinus, we've been rubbing this thing for over a decade now, and even more than a decade, and so transfer pricing is a branch of international taxation for those of us that are familiar with international taxation, and for the international lawyers, in the room. And what we're trying or seeking to achieve in transfer pricing, we want to ensure that tax benefits are retained where economic activities are performed. If the economic activity is performed in Ghana, let the tax benefit be there. If the economic activity is performed in Nigeria, let the tax benefit be there. And while you're doing this, you also want to bring in the concept of risk and returns. We are all familiar with the saying that says the higher the risk, the higher the returns, So whosoever is bearing more risk, performing more function, utilizing more assets, within the group is expected to also, report, the higher returns based on that principle. And the principle that helps us to achieve that is the principle called the arm's length principle. The arm's length principle. Many of us must have heard about that. It's just a principle that says that, deal with your sister, deal with your brother company, deal with your sister company as if you are not related, arm's length. If you stretch your arm, somebody that you are not hugging, if you get to the zone of hugging somebody, that means your sense of judgment may be already compromised, you understand? And because if your sense of judgment is compromised, you may not be able to report the kind of profit, that you want to report. Let me put an example to this. You have 3 companies that are using the same building for the purpose of their business, but apparently this building was rented. And instead of them to share the rent, of that, of leasing that building across all the entities, benefiting from that building, one entity is the entity carrying the burden of this building lease cost, in its own books, such that, that depressed the profitability of that entity. You will see that the profit that entity that is carrying the burden of 3 entities altogether will be lower than what the taxman will be expecting, and that is what transfer pricing wants to say, that where you are, performing economic activities, please let's align risk and reward, accordingly using the arm's length principle. Yes, there are currently conversations going on, in the globe, the BEPS conversation, Pillar 1, Pillar 2, and the proposal to move a bit away from the arm's length principle. But largely, as of today, for the purpose of simplicity, and getting the message across to our audience, the transfer pricing as of today is largely established, leveraging, the arm's length principle. I would say that again, the arm's length principle seek to establish that the behavior or the pricing of a transaction is done in a manner as if you guys are not related. Let me quickly jump to transfer price. Then transfer price, we definitely speak to the price at which, or the rates at which services, tangible properties or intangible properties are traded between connected taxable person. So when you say what is a transfer price, many of us, we are students of performance management, in accounting. If you are chartered, whether you are ACA or ACCA, whichever it is, you are familiar with a transfer price. Divisional performance management, cost center, profit center. We are all familiar with that, concept, and that transfer price. And we know that the purpose of determining transfer price in performance management is to maximize the profitability of the business, as a whole. And the same vein, when you then begin to see, multinational organization, spreading across different jurisdictions with different tax laws, you can then see that, transfer price can be used as the tool of beyond just maximizing profitability, as a group, also using it to reduce the effective rate, of that group. Why that can be done in an ethical way within the arm's length principle, we've also seen instances, where this is being abused, that it's now borderline between either tax evasion or tax avoidance, you understand? And that's why it is important that, government put in laws in place and regulations to see to it, that, the people that are attempting, to do that are, addressed by the provision of the law. So for the purpose of people that are trying to establish, how do I establish whether I'm related or connected to an entity or the other, according to the Nigerian transfer pricing regulation, which is largely aligned, with the OECD model tax convention for definition of the, Article 5 to, for defining who a connected person is, and also with the OECD guidelines for transfer pricing regulation. The Nigerian TPP regulation has introduced, a very big concept called influence. If somebody can influence you, according to the Nigerian TPP regulation, that person is likely related to you, and that person can affect your sense of judgment when it comes to doing business together. And reading expressly from the slide, businesses, persons are deemed connected, where one person has the ability to control or influence the other person, whether directly or indirectly, in your decision-making process, and you want to look at it, the way we typically establish this in practice, is either whether you're having capital participation. So if somebody is a shareholder in another company such that, is a controlling share, and you can make some decision, you say those people are connected, whether directly or indirectly, if you are holding capital. And the news is that, I don't know whether it's a good news or bad news, is that there is no threshold to capital participation in Nigeria. Once you participate in capital, in another entity, whether directly or indirectly, and you do business together, then that interaction will fall under the purview of transfer pricing regulation. Also, if you have common management, you have somebody sitting on the board of company A and also sitting on the board of company B, you can see that there is room for discretion to be suspended for the possible advantage, in that sense. And lastly, if you can establish that, the person has some form of control over the other entity for the purpose of decision making, then you will say that those two entities are captured as connected person. Is this limited to just corporate entities? No, the answer is no, including individuals. So Emmanuel, EOO, can be directly or indirectly connected to any corporate entity, depending on the level of my participation or involvement with that entity. I believe I've been able to, put context to how to establish, whether you are, related and connected. So why is transfer pricing important? I think I'll try to establish this foundational knowledge earlier today, transfer prices may have an effect on a group's taxable income in different countries in which they operate. In fact, even in the same country, if you're a domestic group and all the entities within the group have different effective tax rates, there are transfer pricing concerns. You understand that. Also, tax authority are becoming more interested in transaction with related parties as they affect, tax revenue. The reason is, Dr. Paulinus made out time, to be part of this conversation is because, some of these practices are currently impacting the tax revenue of Nigeria, and the FRS is committed to seeing to it that, that's stop, going forward, and that is stop going forward. And transfer pricing is now a very big, important conversation at the international tax level, and is the biggest problem facing multinational enterprises. If you ask CFOs or owners of business across the globe about the biggest taxation risk they are facing, you will realize that transfer pricing risk ranks, high. Also, cascading it to Nigeria, looking at the Nigerian TP regulation to 2018 version, introducing administrative penalties. Nobody really wants to fall into that zone of paying penalty in the tune of 5 million, 10 million for transfer pricing infractions, and that's why the subject of transfer pricing is something that you cannot push aside, or you say you want to go about your business without paying attention to it. In fact, if you ever have a dream as a business to go global, to become a multinational business, then transfer pricing conversation should be the conversation that will be early in your strategy development. You don't get into the strategy to realize that, transfer pricing implication may throw your strategy off guard, and you may not be able to, achieve what you want to achieve. For time, I think I only have about 5 more minutes to wrap up this presentation. The legal basis for transfer pricing in Nigeria is, okay, is there any law backing the tax authority to pursue taxpayers to comply with transfer pricing in Nigeria? The answer is yes. And, the transfer pricing regulation is not standing alone, it's actually resting on the provisions of the Principal Act. Many Principal Acts, in Nigeria speaking to tax, the Personal Income Tax Act, Section 17, Section 22 of the Company Income Tax Act, Section 15 of the Petroleum Profit Tax Act that has been amended to be the Petroleum Industry Act, the Capital Gains Act, and the Value Added Tax Act. One of the things that is common with all these Principal Acts is the fact that this provision are speaking to anti-avoidance. If I can just paraphrase, and that provision is saying, if the taxman can establish that businesses are putting in place any scheme just for the purpose of avoiding tax, the taxman has the authority to disregard the scheme and treat the transaction as if the scheme never existed. And that is what the transfer pricing regulation in Nigeria is aimed upon. And transfer pricing in Nigeria has developed over time, from 2nd of August 2012, when the very first transfer pricing regulation was published or gazetted, and the FRS was appointed as the administrator of TP in Nigeria. We've seen people complying in trickles, but not as expected. So that necessitated, the need to reintroduce the 2018 version that revoked the 2012 version. The 2018 version addressed some challenges within the transfer pricing regime, which we may not, we may get into that conversation in subsequent webinars, but for the purpose of this conversation, that 2018 version also introduced the administrative penalties that I spoke about, earlier, and that took effect from the 12th of March. Any financial year after this date is being governed, by the administration of the 2018, the TP regulations, also called the NTPR in my slide. And since then, the FRS has been encouraging taxpayers to comply and also performing audit exercises. I can tell you for free, several billions of naira has been recovered, to the Nigerian government, as additional taxes from audit exercise, transfer pricing audit exercise. I think Dr. Paulinus will be able to help us shed more light into that. And there are some objectives of the transfer pricing regulation in Nigeria. I will quickly rush through this. Is to defend the nation's tax base. We don't want any other country to take the pizza slice that belongs to Nigeria. I believe some of us on this call, we are patriotic citizens, and we really want our nation to earn the revenue that is needed for development. Also, to provide tools to prohibit tax evasion. The transfer pricing regulation in Nigeria is ensuring that, people are not evading taxes, from Nigeria. Also, to reduce the risk of economic double taxation. Remember that I said that transfer pricing is always two-edged, and if you do your affairs in a way that is not in line with the transfer pricing requirements, and audit comes in the future, you may suffer double taxation because the taxman will not listen to the fact that the other entity in the other country has paid tax on that amount. No, they want to get their own share of the pizza, and so the group may suffer double taxation, if they don't comply with the transfer pricing, regulation. Also, it's also to provide level playing field, for multinationals and independent enterprises in Nigeria. I know some of us, we are very familiar with some local brands that are no longer existing, because global brands came into the scene and they couldn't compete, and some of the measures that global brands used to send competitors away from the market is to kind of use, the fact that they have big pockets, offshore, to bankroll the local entity such that the local entity is able to capture the market and send away competitors, and then they begin to cash out. Some of those schemes, when transfer pricing rules are in place, it helps us to ensure that our local businesses can also compete with multinational businesses operating within the landscape. A big example is, for example, if you're manufacturing juice in Nigeria as a local business, your business will procure juice. You don't have any related party or outside Nigeria, you face the true cost of doing the business. But if a multinational has a subsidiary in Nigeria and wants that subsidiary to send you out of the market, they can actually be selling the juice concentrate to that entity at no cost, such that the guy is able to reduce the price, sell better graded products, and send you out of market. So those are the kind of things that government is trying to use this transfer pricing regulation to see that, we are able to address them accordingly. Lastly, it's also to provide certainty for the transfer pricing treatment in Nigeria. I believe investors really love certainty. When investors want to invest, they want to know the kind of exposure they will have when it comes to taxation and what are the transfer pricing rules like in Nigeria, so that they can proactively comply and mitigate, future losses of revenue, due to audit exercises, And let me move faster. So if you choose not to comply, but before you choose not to comply, you need to know what your obligations are, as per, transfer pricing in Nigeria. I will dwell a bit more. Let me appeal with my, technical team to give me additional 5 minutes, just to set the proper context for this conversation, and to make us come to a deep awareness of what our obligations are when it comes to businesses with transfer pricing obligations in Nigeria. The first obligation is that you need to ensure that your related party dealings are at arm's length. That is the first requirement the TP regulation expects from you. And that is established by proactively looking into your related party interaction, setting policies in place, and implementing those policies within the organizations. And that's where consultant comes into play. That is where Cardinal comes into play. Review your transaction, help you to set policies in place and support you, with implementation strategies. So that first obligation is ongoing. And you need to do it contemporaneously. Year on year, you need to review your interactions with your related party to see to it that you are still in line with the provisions of the law. And after having done that, the taxman wants to get that feedback. So they ask you to file what we call the TP disclosure form. on an annual basis. And that form is simply asking you to make a disclosure of all the transactions that you have conducted with your related parties in the course of the 12-month period, and you are expected to do that within 6 months after your accounting year end. This is being done annually. And the next obligation is your TP declaration. The taxman wants you to declare and let them know your related party, your management, how involved you are within the group, the value contribution you are giving to the group, and your role within the group as a subsidiary if you are in Nigeria, or as the HQ, as the parent company in Nigeria, as the case may be. So you are expected to do this declaration also, 6 months after your accounting year end, or 18 months, after incorporation day, whichever is earlier. But there's a clause to this obligation. If nothing has changed since you made your initial declaration, you don't necessarily have to declare again, but if there's any changes to your structure by the way of merger, acquisition, change of management, change of director, then you then need to let the tax authority know. You know that this is important for them to reassess your connected persons level and for the purpose of administering, the transfer pricing rules in Nigeria. And after that, you are required to prepare what we call, the TP documentation. For businesses that have related party transaction less than, 300 million collectively, you are not expected to prepare this except the tax authority, make a request for that, and you'll be given 90 days to do that. But for businesses that have values of transaction in excess of that threshold, you are required to put in place this TP documentation on or before the end of 6 months after your accounting year end, and this should be done annually. Submission of TP documentation as may be requested by the tax authority, you need to do that within 21 days. And submission of any documents that supports your transfer pricing, position as a taxpayer, you also need to make it available to the tax authority based on the time that they ask you to make that documentation available. There are some other connected regulation with transfer pricing, which is your country by country reporting, which is simply asking you to disclose, if you belong to a multinational enterprise, your connection, the parent company who will be filing this country by country report, which is also an offshoot of the United Nations OECD recommendation on managing the impact of achieving tax arbitrage through transfer pricing, non-compliance. And also the obligation to file, CBC reports. Okay, let me quickly move to my last slide for the purpose of this conversation. I think second to the last slide. The TP offense in Nigeria attracts humongous penalty. And that is where the conversation of today is going, because there is a grace period for you to do what is right so that you don't suffer this humongous penalty. Look at your slide. I may not necessarily, run through everything, but you can see some figures here that are very, thought-provoking. No CFO, no tax manager will want to fall into this net into this trap of not doing what is right on time and making you lose shareholder value by paying this humongous penalty. 10 million, 1% of total value of related party transaction, whichever is higher, the higher of 10 million. You can see 10 million. I think the least here is 1 million naira, 5 million naira when it comes to penalty. So transfer pricing penalty are pretty huge, and you don't really want to use your shareholder value to settle penalty. And that is where we have to wrap up the conversation on this last slide. In February of this year, the FRS made a public notice about the migration of the transfer pricing, returns from the former ETP platform, and they migrated it to the Tax Promise platform. The Tax Promise platform is the platform that, businesses use to file their normal CIT, withholding tax, VAT, returns. So the tax authority deemed it necessary to consolidate all tax returns on the same places. And, these are the 8 things that you need to note about this migration, that all transfer pricing and related returns, including your CBC returns, are now to be filed on this new platform. The FRS issued this public, public notice in February. I mentioned that earlier. And then taxpayer may choose to upload all their past filings on the new platform where you choose to do that. But if you don't choose to do that, then there's no penalty for not doing that. It's voluntary. But if you want to just mitigate the risk of, in the future, I don't want conversation around the fact whether they can find my returns or not, you may want to choose to do that. Also, there is a grace period up to 30th of June, for people that are yet to file all their past years transfer pricing obligation, that if you can do it before 30th of June, then there won't be penalty for not filing. You will escape all those 13 millions for each year. You understand that you have not been doing that. So this is a conversation you may want to trigger with your stakeholders so you can engage support where needed to regularize those compliance as quickly as possible. But penalty will resume immediately after the grace period. So from July, if you are yet to file all these back years and the taxman comes knocking, then you have to face the consequence of this penalty. Also, just to let you know that the FRS operate, a help desk, for real-time support, if you are having any issue, with filing the transfer pricing returns on the new tax promance platform. Also, we understand that people had initial issues, with the platform, some modules not working very properly, and we understand that, these are being resolved. Dr. Paulinus will be able to also help us put context to all these issues today and let us have that comfort that all things are now moving smoothly, and you should be able to meet up, filing all your back year compliance obligation. Lastly, you can see that the color of that box is different because I want to emphasize this, that this public notice, presents an opportunity for you to update your compliance status without consequences, without consequences. And that is where I will want to end my presentation, and we can then take it on in the panel conversation. Thank you very much, Anu. Over to you.
Okay, thank you so much, Emmanuel Olalekan. Thank you for that insightful presentation. I mean, from what you said in this couple of minutes, I just had to tell myself that the absence of planning is the presence of planning to fail. Because, I learned that I had to plan to do what I'm supposed to do when it comes to transfer pricing. Then I also had to plan what I'm meant to file so that the tax authorities don't come after me or my corporate entity. He also clarified the fact that before we used to feel that transfer pricing was just for multinationals, it was just for the very big companies or the big 10, the big 5. But with the explanation of arm's length relationship and connected parties, I also saw that even when they are related entities, sister companies, maybe, then we have to also make a provision for transfer pricing. Thank you so much. I mean, there was so much that we learned, and I can say and be certain that we can agree with me that the concept of transfer pricing has been well explained. It has given us a level playing ground for us to come up with our questions and to get clarity to the seemingly confusing aspects of migration to the tax commerce platform. So I'm surely we'll be commencing our panel session, and we'll be having, just so people, yes, our two experts that we have on the call today, we'll be having Emmanuel Olalekan still, and we'll also be having Dr. Paulinus Iyika. So before we commence the panel session, I would like to introduce our panelists to us. I would like to start with Dr. Paulinus Iyika. So just a brief introduction of our panelists, and they would also be giving us a brief introduction. That is, Dr. Paulinus will be giving us a brief introduction to the subject matter before we commence. So Dr. Paulinus Iyika is currently the head of the Transfer Pricing Compliance Division at the International Tax Department, at the Federal Inland Revenue Service. And I'm sure we also heard when Emmanuel Olalekan told us that the tax authority that bears the burden of execution of the provisions of our transfer pricing regulations is the Federal Inland Revenue Service. So it's a privilege for us to have somebody from the Federal Inland Revenue Service addressing issues and taking our questions today. So Dr. Paulinus Iyika is a pioneer staff of the department, that's the International Tax Department, with over 13 years experience in tax administration. He holds a PhD in international finance from the prestigious Convenant University. is a member of various professional bodies, ICANN, CITN, is a regular speaker in the public finance space, week-based tax compliance, enforcement, and international tax policy. Is well versed in transfer pricing. So I would like us to pay abrupt attention. Let's just all our attention actually on our panelists today. I would also love to briefly introduce our second panelist, that is Emmanuel Onasami, to us. I know we've heard him speak and we are grateful to have you on this platform as well. So Emmanuel Olalekan is the current lead partner at Cardinal Professional Services, and it's a firm focused on delivering creative business solutions to its clients. That's one of the reasons why we are here today, to simplify things to us. So prior to leading the firm, we worked with Anderson in Nigeria as a senior manager, where he was part of the pioneer team and was crucial to the development of the practice and the overall success recorded by the firm. He started his professional consulting career with KPMG Professional Services, where he worked in the firm's tax and regulatory services division. Emmanuel has supervised and managed more than 250 consulting projects for large multinational enterprises and domestic businesses, and has balanced experience in corporate finance, regulatory, tax, and transfer pricing services across the industry. So Emmanuel has over a decade of experience providing professional services to businesses across the globe. He's also a guest on business shows in Nigeria, the Nigerian media TV space, providing expert opinions on business and economy related issues. I'm certain that some of us would be like, oh, I've seen this one before, maybe on channels or TV, say, yes, this is Emmanuel Olalekan. Thank you so much to our panelists once again, Dr. Paulinus Iyika, and Emmanuel Olalekan. Thank you so much. So to commence this panel session, we would love to have you, Dr. Paulinus Iyika. We'd love an introductory speech from you before we delve into our questions. Thank you. Dr. Paulinus, can you hear me?
All right, so thank you very much, our moderator. Good morning, everyone. So thank you. Yeah. Always, like Manuel said at the beginning of we've come a long way in the, and of course, desk. What we continue to do is to ensure, as governments, for all to be able to fulfill their obligations. So I think that is what, of course, because we believe in what is very common is voluntary compliance. Of course, don't truly comply, so we don't need to push you, we don't need to force you. Hello, can you all hear me? Hello?
Yes, we can hear you. Go ahead, Doctor.
We can now.
Okay. It's like the network was a bit unstable, right?
Yes, it was.
Oh, okay, so thank you. So, like I was trying to say that our that we've continued to partner together to ensure that we provide all the enabling environment for taxpayers to comply. We are very familiar with the concept of voluntary compliance, which is what Nigeria currently practices, where taxpayers is expected to voluntarily comply. So, but we, as much as possible, also try to push it beyond just voluntary, but also to bring in what we call cooperative compliance, where we cooperate with you to help you to comply. Because some people are just waiting for that little cooperation from the tax authority, such that the tax authority is not seen as a police officer, or maybe as somebody that is there to witch hunt. But so we try to provide an enabling environment such that compliance becomes easier, and then for the taxpayers to fulfill their obligations, even in accordance with the law. So that would be my comment, and that's exactly the whole idea of this webinar. So thank you very much. I don't know.
Thank you so much, Dr. Paulinus Iyika. I don't know if Emmanuel Olalekan would like to add something before we begin with our questions.
No, I think we can just go straight into the Q&A so that we can get the room started.
Thank you very much. So while I begin with the questions, I would like to inform our participants, again, for people that are to join us later, that these questions were gleaned from our registration, the questions we put up while we're registering. And that's not the end to it. We will also be taking live questions after this session. Just at the conclusion of the session, we'll be taking live sessions. Also, we'll be opening the chat room at some point for us to take questions. And if by chance we are not able to take everyone's questions, please know that we will take them on our channel. We'll address them. So very soon, while this is still going on, while our session is going on, we'll be projecting a QR code, so you can scan the QR code for you to be able to join us on our social media platforms. Okay, so we'll be coming up with questions now, and I'm so elated. I'm so glad that our panelists are here to take all our questions and dissect them. That's a very big one for us here. I mean, that's why most of us are here today. Okay, so I think I would like to proceed with Dr. Paulinus Iyika, and I'm very certain that we can all hear me. So our first question is, how is the International Tax Division structured? We've talked about the division that is responsible for transfer pricing. So how is the International Tax Division structured to ensure that taxpayers comply with every aspect of the transfer pricing regulations? So that's our question. Did you get that, Dr. Paulinus?
All right.
Okay, thank you.
So thank you.
Yeah,
that's why so thank you.
It's breaking. It's breaking.
Dr. Paulinus, can you hear me, please?
Once again.
Can you hear me?
Yeah. So I want to state that just like Emmanuel stated. Can you hear me? Oh, okay.
Yes, we can now.
Okay, I think I can hear you clearly. Okay, you can hear me right now?
Yes, we can now.
Yeah, I think the network is quite unfriendly now. I don't know whether it's weather. I don't know what the problem is. So can I go on now?
Yes, please, you can.
Okay, so like I was trying to say that we've come a long way in the practice of transfer pricing or the administration of transfer pricing in Nigeria. We started off as a transfer pricing division. That was way back in 2013, just immediately after the issuance of the transfer pricing regulation by the federal government. So the office was set up at that point as a transfer pricing division. So at that point, we only had a small desk of a few officers that, of course, are meant to manage the aspect of return processing. That is when for taxpayers when they file returns, and then again, those that will receive those returns and ensure that those returns are properly processed. We also have then we had a unit called the transfer pricing cross-border. Those people also oversee, those officers oversee transactions or companies that have cross-border transactions, like Emmanuel stated, that multinational companies in this case. So we then have the other units also that was dealing with domestic transfer pricing as well. So, but as we grew along the line. So we didn't have currently we have we're structured such that we have some sort of sectoral arrangement where you have a whole division dedicated to transfer pricing of oil and gas. Then you have another division dedicated to non-oil. Non-oil include manufacturing, pharmaceutical, telecoms, and the rest of them. So all of those ones form the non-oil. So of course, we all understand what oil and gas is. Then we also have another division which is ahead that manages the entire compliance in terms of the filing of by country reports, and the filing of country by quantifications, and even the transfer pricing returns themselves. So we manage them and ensure that taxpayers are given the opportunity or given the right platform to comply with the various provisions of the law. So at the moment, we have this structure in place. So for those filing, at the point we're using the TP plats before this migration, we had a head desk. Of course, the desk is still there, where taxpayers come in and they have their credentials. I mean, they have their login credentials created, and then from there, of course, they're enabled to log on to the platform where they were able to file their returns. So that help desk is also there, and then, of course, we also have a dedicated channels, emails where we also communicate. You are free to also send emails and also get clarifications, because part of our role is also to educate taxpayers, because we understand that taxpayer education plays a very fundamental role in the business of compliance with tax law. So we try to educate. A lot of people are not complying, not because they may not necessarily because they don't want to comply, but essentially because they don't even know how to comply or what to provide. So we provide that sort of education as well. So we have all of this in place to ensure a seamless compliance in the international tax departments. Thank you. I don't know if that kind of addresses your question.
That sure did address it. Thank you so much, Dr. Paulinus Iyika. Now, I mean, we now understand that channels are being put in place to entertain every one of us that would like to make inquiries. Channels also are being put in place to address issues that we can be facing while trying to comply. And channels are also put in place to ensure that people that are not aware of their responsibilities they are made known to them. Thank you so much. And it was seeming like, okay, there's just a division. So how do they handle everything? Well, thank you for taking us through the growth process. Thank you for taking us through how well the division has tried to bring in everyone that is meant to be within the net. Thank you so much. We will still be having some questions still to you, Dr. Paulinus Iyika, on the administration of transfer pricing. We already established the fact that the tax authority is our governor in this aspect. So we are glad to have you here. So we'd like to put some questions to you. Okay, so our second question to you, Dr. Paulinus, is the transfer pricing regulations mentioned establishment of influence as a basis for determining connected persons. We also heard it while Emmanuel Olalekan was talking about arm's length relationship, connected persons. So we'd really like to know in practice, how do the FIRS interpret influence for the purpose of determining connected persons?
Yeah, so thank you very much for this question, because I find it quite pivotal to the discussion of transfer pricing, because first of all, before you think about complying, you then have to ask yourself, am I within the scope of transfer pricing? Should it be something that should give a thought, or should it be something that I should worry about? Again, so how we look at transfer pricing or connectedness, or as we call it, is we look at it from the global best practice. Even though if you look at the transfer pricing regulation, which is the regulation governing transfer pricing in Nigeria, the transfer pricing regulation in Regulation 12 pointed out that where, I mean, trying to define what or who should fall within the scope of transfer pricing, pointed out that, of course, where a taxable person, is controlled, is controlled or influenced by another taxable person, maybe located somewhere else, either directly or indirectly, that influence could also be influencing its financial decisions. It could be influencing its commercial decisions. It could also be influencing its that is operational decisions. So those are the three key things we look at. We look at, okay, so even though ordinarily in accounting parlance, when they say a company is a subsidiary of a company, let's say company A is a subsidiary of company B. So what that means is that company B is parent of company A. And by being parent, of course, you're expected to have what they call a controlling shareholding, let's say, which is usually defined as 50% above. So if you have 51%, if you have two people, for example, that own a particular company, one person has shareholding of about 51%, and the other person has just 14%. So the person that has 1% is considered as the parent, and the other entity, of the entity. So the entity is considered a subsidiary of the parent. So that is just the kind of basic understanding of when people talk about related parties. But again, for the FIRS, we align with, of course, global practice, where we go beyond looking at the shareholding arrangements or the ownership arrangement to say, look, how do we, because what we're looking at here is economics, the economics of the transaction. So in looking at the economics of the transaction, who makes decision or who influences the decision of the other? So even though you may not have up to 51% shareholding, but if it is inferred, for example, from the facts, before us, that the decisions of the other company is largely influenced by another entity that which is not even directly the share, it doesn't have a controlling share, we will begin to look into that issue of course what that means is that you have established what we call connection. So that connection automatically have come within the scope of the transfer pricing regulation. So it's not. Let me just kind of break this down a bit. So let's say, for example, looking at the financial decisions, for example, you have a company that cannot, let's say, approach a third party to borrow. All its money, all its funding comes from a particular entity. Everything has to come from a particular entity, even though that entity doesn't seem to have any, even they may not even have any shareholding relationship. But every financial decisions and everything, loans and everything that has to come to that company comes from that particular entity. So that kind of financial relationship could infer that there is a related party. They are the related parties, even though there's no clear shareholding arrangement. So it could also be where you have commercial things as well. Let's say suppliers, customers, or vendors. We've seen it in practice where you have a particular company in Nigeria, for example, and then all the raw materials he purchases comes from one particular entity located, let's say, in China, or let's say located, for example, in what Emmanuel referred to as tax-friendly jurisdictions. Let's say like the Bahamas, the Bermudas, and the British Virgin Islands. So all of this procurement for that particular item comes from that entity. So that could give us an idea that, and again, apart from just coming from that entity, we also realize, we could also see from other facts that it appears that even the pricing between them does not align with the arm's length principle. So automatically we will begin to, that could be an indicator for us that they are related. So those are the issues we'll look at. And sometimes we also consider what we call circumstantial evidence. Okay, like if you recall when Emmanuel was making his presentation, he said something like where you have two entities maybe sharing a particular facility or a building or an office space, and they realize that, and they pay rent for that office space, but you realize that the entire rent is charged to the book of one, rather than share it among themselves based on the floor space or whatever apportionment basis they choose to use. But again, so in that kind of situation where they share, where they occupy, let's say, the same apartment, and they realize that one party carries the entire cost of the rent. That could tell you, because in a real market situation, or let me speak like economists. Economists will say a rational a person will not allow that, will not even take that kind of decision, or will not allow that to happen. So a rational person will say, well, we use the same facility, we make money from the same facility, we'll have to share the costs. So, but where we see where one person takes up, that tells you a whole lot that there is indeed a relationship. So that's what I will refer to as circumstantial evidence. So that is also how we also try to figure out influence, even where there are no clear shareholding arrangements. So I think with these few points, I don't know, I think I was able to do a bit of justice to this.
Thank you so much, Dr. Paulinus Iyika. I mean, you said with this few points, they were not so few actually. So thank you for making us understand that it's not just by capital participation, it's not just by financial influence alone. Thank you for helping us understand the impact of influence and arm's relationship in itself. And that these are the things that the FRS tends to look at, the relationship between the entities, how they relate to each other, what would have happened if it was in the open market. Thank you so much for breaking down this aspect to us. We still have one more question. And one thing that I'm so happy about personally is that these answers are satisfactory, they are succinct, they are just giving us everything we need. Thank you once again, Dr. Paulinus. So I'll be asking one more question, still on the administration of transfer pricing in Nigeria. So we would like to know, how robust and operational is the support desk at FRS to assist taxpayers with easy compliance, just with compliance of transfer pricing generally. You talked about the channels that the division already put in place to ensure that people are aware of their obligations, to ensure that people can satisfactorily fulfill their obligations. So this channels the support desk. So how operational is it? We'd really like you to explain this to us. Just share the Thank you.
Yeah, so thank you once again. So we have a very robust channel, which of course we have been implementing for since the inception of the transfer pricing regime in Nigeria. So we understand how the importance of, like I said, we understand the importance of providing that enabling environment for taxpayers to be able to fulfill their obligation. So on that backdrop, we created an entire unit that manages the entire compliance architecture. So for example, we have what we call the inquiries units. So this inquiries unit exists for both country by country reporting and for transfer pricing filing as well. So in this inquiry unit, taxpayers ask questions, they send emails. We have a dedicated email, which is transfer pricing at firs.gov.ng, transfer pricing at firs.gov.ng. So this is a dedicated email for this purpose. And so taxpayers make use of this email. They send emails to us, and then of course there's officers who is actually managing this entire process, ensures that emails are attended to promptly, and then taxpayers get the kind of clarifications they want, or the kind of guidance that they actually want. So we have this in place. We also have of course the compliance. Apart from the inquiry unit, we also have the compliance unit. So the compliance unit is the one that is in charge of ensuring that they remind you. You understand? We also have the obligation to remind you of fulfilling your own obligation. So we just wait for you. And not like, let me give an example, like in fairness, I don't know whether we have, but again, in fairness to our traffic officials. But again, what we see in Nigeria is that, sometimes I've heard people say that they seem to be waiting for you to commit an offense. So they kind of sit and wait for you. You are driving, and you don't know that particular road you want to apply, especially in Lagos, for example. And that road you are going to apply is actually one way. The road is designated a one-way drive. And then somebody there is watching you. The moment you make that that mistake and enter that particular road on the wrong direction, then they jump out of wherever they are. So to accost you and to begin to try to enforce the traffic offense. So again, so what we do, we don't operate in that manner. What we do is that we continue to remind taxpayers, send them reminders on a periodic basis. For example, a taxpayer that has a due date, let's say for June, so we will begin to send you a reminder sometimes a month ahead of your due dates, so that you'll be able to put all that you need to put in place and to make sure you fulfill that obligation. So we will have all of this put in place within the framework that we operate with, to ensure that there is continuous support for filing and for fulfilling for discharging obligations with respect to transfer pricing.
Okay, thank you so much, Dr. Paulinus. I mean, from what you just said, we know that the support that is actually supporting with the reminders, with the updates, and it's not the usual thing that people used to think that, oh, FRS, because they are up there, they tend to take it by force, the violence kind of thing. Thank you for helping us understand that, people don't need to run away from, fulfilling their obligations. Corporate entities don't need to try to shy away from fulfilling their obligations, because FRS makes it easy for them to do what they are meant to do. Thank you so much. So we'll be moving on with this same session, but before we do that, we would like to inform our participants that the chat box is open. You can drop your questions like we promised earlier. We'll be taking live questions, some live questions on this during this panel session. So please, you can drop your questions so we can address some of them. And the ones we are not able to address, we'll address them on our social media platforms. So please still scan the QR code that will be appearing on your screen anytime from now, so you can follow us on our social media platforms. Thank you. So I'll be going to Emmanuel Olalekan, and we'll be talking about certain things you already spoke about while you were presenting, because I mean you're an expert in this field, and you really took on the fact that it is important for us to fulfill our obligations. It is necessary for us to even be able to live, liability free when it comes to our business management, finance management. There are things we naturally need to pay attention to as a corporate entity, particularly if we have connected parties or we are playing in the multinational space. So we'd like to ask you, what is the importance or the role of transfer pricing returns filing in the administration of transfer pricing in Nigeria? So what if I don't file? What if I don't file my returns? What should it really impact? So I would like you to answer that, Emmanuel.
Okay, thank you, Anu. Thank you. I've been enjoying the conversation, the insights being brought by Dr. Paulinus there, Answering your question, somebody may be asking the question, what is the importance? I believe that question must have been from someone. What is the importance of filing the TP returns? What if I don't file the TP returns? The first thing I would like you to understand is that the Nigerian tax system operates on a self-assessment basis. And self-assessment basis means that unlike in other climes, the tax authority in Nigeria will allow you assess yourself based on the provisions of the law, and put forward what you think your affairs as being tax-wise. And that is not any different, when it comes to transfer pricing compliance. If you look at the provisions of the TP regulation, the requirement is that every taxpayer that have transfer pricing interaction should submit some form of transfer pricing returns, whether disclosure form or declaration form. So that particular form is what the tax authority will pick and review your self-assessment, based on what you disclosed in that form. You also agree with me that, the tax authority, FRS, do not have limitless resources when it comes to auditing taxpayers. So they need information to perform some desk review, some risk assessment to check, the kind of taxpayers that they need to have further engagement with, either as a form of, audit or investigation, whichever the case may be, until you provide this information in your transfer pricing returns, you will not have equipped, the tax authority with the required information in Nigeria. And that's why the law mandates it that you file that return so that the tax authority can have the tool they needed to perform their job. So it is important that, that tax returns is fine. I don't know if Dr. Paulinus wants to add to that. That would be my response.
So, thank you, Emmanuel. So I think you've done a lot to. I also want to look at it from the taxpayer perspective. So I want to look at it from what is the importance of filing transfer pricing returns from a taxpayer perspective. So for me, the first thing is it's actually a requirement of the law, and so filing transfer pricing return is fulfilling your obligation, or even your work. I even call it your constitutional obligation or civil obligation, right? Because even the Constitution of the Federal Republic of Nigeria requires that people and entities, persons and entities also file and pay taxes as at when due. So if doing that is discharging your civic responsibility. Then secondly, I also want to point out that it's also a way of demonstrating that your business is transparent, right? So because if you file transfer pricing returns, the idea, what the returns provide is like a disclosure. That's why we have a form called disclosure form and a declaration form. So that, by the names of those forms, that tells you you're actually declaring. Just like when somebody is appointed into a public office, let's say president or a governor, there's this what they call asset declaration. So you declare your assets to say this is what and what I have, even before I became the president or before I became the governor. So at the end of the day, we also go back to use that as a basis to say, okay, at the end of your office, okay, what are the additional assets you acquired? So that declaration is also, and the disclosure is also to provide information for transparency purposes. So, and that gives the tax payer some sort of reputation in the eyes of the tax authority to say, okay, for you to be compliant with the law, of course, we will consider that that you are quite transparent and there may not be so much to worry about. And the second one, the third one is risk management. So I call that risk management because, like Emmanuel also pointed out during his presentation, towards the end of the presentation, we could see the penalties that are there for those that have not complied either with the returns themselves or with the documentations and all of that. So these penalties are there, and again, so for a company not to run foul of and face these consequences of being penalized, it is important that the company provides the transfer pricing of returns and other documents that are required by law. So I think that's the perspective I want to look at. Emmanuel has been able to cover the aspect of the benefit of that to the tax authority, which of course helps also assess you and also to determine how you have complied with the arm's length, and then also to help us deal with the arbitrage that he talked about in terms of shifting profit from one country to another, just for tax benefits. So that will be my addition to that.
Thank you so much, Dr. Paulinus Iyika. Thank you so much, Emmanuel Olalekan. So I would also like to address this question to Dr. Paulinus. We could really would appreciate it actually, if you briefly help us with insight into the types of financial information and accounts that the taxpayers are required to disclose to the tax authorities. So you are representing the tax authority. We would really love you to give us insight, just brief insight on the information you expect from us and the details of accounts that you expect from us as taxpayers to file or to disclose to the tax authorities.
Yeah, okay, so thank you. I think I will start by saying that the documents that you are required to provide will depend on what you are filing for. So what do I mean by that? So if you're filing your transfer pricing return, which is your annual obligation, which of course is in line with the self-assessment, like Emmanuel pointed out. So you are expected to provide, like for companies that are existing, you're expected to provide the same filing you file the same document that you're filing your disclosure form, you file in the disclosure form, you're filing first time, so or there are changes that we point out, and then you're also supposed to also file your audited financial statement for that you file your AFS. Then documents like the tax computation and the sometimes asset schedule and the rest of it. You are expected to now why it depends on filing. The second one, if you're filing, if you have been required, if the FIS, for example, has written a letter, that's after you have filed your returns, and then we have conducted what we call risk assessment in-house, and then we have decided, okay, let's take a look at your returns to review them and then see whether you have complied with the law. Then we could make requests for what they call transfer pricing documentation. So that transfer pricing documentation, of course, will it includes what we call master file and what we call the local file. Right. So the master file tells us about the entire multinational or the group. Yeah. So the various subsidiaries or various entities within the group. By way of a group structure, you tell us the various transactions happening among the various members of the group. You're going to tell us the entire transfer pricing policy of the group and the pricing strategy of the group. So all of those things will come under the master file. They're also going to have what we call the local file. So in that local file, that is where you would just dwell on the information relating to jurisdiction, which is Nigeria. So the master file will talk about every other country where you operate. So, but the local file will just focus on those specific transactions that relate to Nigeria. All right. So that is what the local file would do. It will tell us the economic analysis, the industry analysis, what are the things that inform, what are the fundamentals that inform your pricing strategy. So, and all of that. So those are things we're going to provide right in the local file. Then again, we also usually make requests for other documents that are financial in nature. For example, we could make requests for your trial balances, which of course flow into your audited accounts. We could even ask you to match the trial balance itself to the audited accounts to be able to enable us to trace those transactions that we should focus on. And then we could also ask you to provide invoices to back up the source documents and the ledgers as well. So all those are accounting information and documents that you have, in relation to those transactions. We're going to also ask for those information. So these are some of the things that even most times also ask for agreements. Yeah, so ask for agreement contracts. So if you have, most companies have one different type of contract or agreement between them and other entities. So you have signed an agreement with company B in Netherlands, or company C in Norway, another company in Germany, to provide this, to provide that. So sometimes it could be technical services, sometimes it could be goods that they're supplying for it, sometimes it could be just some sort of business advisory. So all of those things, you've signed an agreement. This is how it will be conducted. This is the rights and this is the obligation of each party, and this is the pricing arrangement. So all of those things you contain in the agreement, and these are part of things we'll request to enable us to do an in-depth evaluation of your transactions. So those are some of the financial information that we actually request from taxpayers. Like I said, let me reiterate: we filing returns, we expect your audited accounts, we expect your disclosure form. Now that it has been automated, we'll have them on tax formats. All you just do is, of course, you will just have to just fill in those forms there online and then attach whatever it is that needs to be attached, and then we're good. Then if we're selected for audit, then provide the other documents. So thank you.
Thank you so much, Dr. Paulinus Iyika. That was profound. I mean, you listed out everything that is required of the taxpayer and the essence of requiring those documents. Thank you so much. I don't know if you has something to add because this has been extensive. I don't know if you'd love to add something.
I think Dr. has done justice to that question. You know, we can
Thank you.
just make progress.
So as we delve into this panel session, I keep on reminding myself why I need to appreciate our panelists because this is a lot and it's been simplified for our sake. Thank you so much once again. Okay, so I have a question from the chat room here. I have a question. So I'll be directing that to Emmanuel, and I think that would be very good for us, for Emmanuel to take this question. So the person said, I have a client registered in Nigeria. The company is an event management company. They organize corporate events, branding for companies. The company receives money from abroad to organize events for Nigerian companies. Sometimes, okay, companies sometimes. So the company receives foreign currencies and also pay foreign currencies to some vendors. For ease of payment and receiving of funds, the company registered another company in the United Kingdom to receive foreign currencies on behalf of the Nigerian sister company. So the person is trying to know if this company should file transfer pricing. So Emmanuel would like you to answer that.
Okay, thank you very much. If I can summarize my understanding of that question. So this company, a Nigerian entity, does event management business for organizations, significant clients in the UK for the purpose of ease of payment and transaction, incorporated a sister entity in the UK, isn't it? And then this sister entity is the entity collecting, fund on behalf of the Nigerian entity, and with this transaction qualify these entities will comply with the transfer pricing regulation? I think the answer is yes. Because the person has clearly said it, this is a sister company, so either there's capital participation or management participation or influence of the Nigerian entities collecting cash for that. And if you want to assign that function, to an independent person, you know that the person will not be doing it for free. Consideration that will be flowing out from the Nigerian entity to the UK entity for performing that function of collecting the money on behalf of the company. To that entity, Nigerian government wants to be sure that that amount is commensurate to what an arm's length in the person will pay for that function that guy is performing in the UK, and that's why you need to comply with the transfer pricing regulation. In that transaction is fully covered, cash collections of your sister entity is fully captured under the scope of the transfer pricing in Nigeria, and you are required to, both file the transfer pricing returns, and where the value of the transaction is exceed, 300 million, collectively in a year, then you need to prepare, the documentation also, like Dr. Paulinus mentioned.
Okay, thank you so much for answering that question. And we will also still have a follow-up question to you, which is still a similar question that we'd just like you to round up for us. So we'd like to know the different types of transactions covered under the Nigerian transfer pricing regulations. You've given us a version of that while you try to answer. So we'd just like you to conclude by telling us the different types of transactions covered under the transfer pricing regulations. Thank you, Emmanuel.
Okay, for those of us, I don't know who asked the question. Anyway, well, you want to check whether your transaction is covered under the transfer pricing regulation. I'm not very specific about the exact regulation, but there's a regulation in the TP regulation that speaks to the fact that any transaction that has the potential of affecting the profitability of any business in Nigeria will be captured under the scope of transfer pricing in Nigeria. So just think through that transaction, that, whether you are receiving income or you are making payments as a form of expense, does it have the potential of affecting your profitability in Nigeria? If the answer is yes, then that transaction will be covered under the purview of TP in Nigeria. To now get to this basic, financial transactions are covered, So if you are engaging in loan transactions with your sister company, then those kind of financial transaction, loans, guarantee, advances, overdraft, whatever form of financial transactions that you may be involved in, they are largely covered in tangible goods transactions. So you are buying products, you are selling products, you are swapping products, you are trading products, as the case may be. Anything that has to do with tangible properties are also covered. Intangible assets are also not left out, whether you are licensing intangibles, know-how, technical know-how, trademark, trade name, whatever it may be, intangible transaction, goodwill, transactions are also very covered under the Nigerian transfer pricing regime, and services, not to overlook services, whether it's the form of valuable services or back office services, whether strategic or support in nature, those services are, well covered under, the transfer pricing regime in Nigeria. But remember what I said earlier, the guiding principle to know whether that transaction is covered for transfer pricing is if that that transaction has the potential of affecting the profits that you are going to declare that year. Thank you.
So much, Emmanuel. Thank you so much. I would also have a follow-up question to Dr. Paulinus Iyika. So I know that during the session, the earlier session, we had the presentation, and while we started this panel session, we have addressed this question. So I would just love Dr. Paulinus to please just give us a summarized answer just to buttress this question for clarity. And so the question is, how taxpayers can ensure that their financial information, we've talked about financial information. So how can taxpayers, ensure their financial information is accurately reported to meet the tax authority requirements? So we have certain requirements and that which is need to be reported to the tax office. So how can we as taxpayers ensure that the financial information we are reporting is accurately reported? And are there best practices for maintaining transparency and compliance in financial reporting for transfer pricing compliance purposes? So are there best practices that we need to be aware of, and how best can we ensure transparency in filing our returns? So that's the question, Dr. Paulinus.
So thank you very much for that question. I think it's a very important question because there's actually a penalty for inaccurate disclosure. Right. So the penalty we have in the current transfer pricing regulation, it's not your failure by returns or late filing of so well areas do with maybe some of
I think you can hear Dr. Paulinus.
inaccurate disclosure or lack of or a particular transaction. So if, for example, it is not, and then the maybe for then we get the fines is engaged, of course there's a penalty of that particular amount. Hear me well, or is it better now? Hello?
Yes, it is. It is.
Okay, it's better.
Yes, it is.
All right. So I was saying that the transfer pricing regulation also makes provision for penalty for not disclosing transactions you have actually entered into that are transactions that are supposed to be disclosed. So, and then that penalty is about 1% of the amount that was not disclosed, or 10 million. So whichever is higher, the tax authority goes for whichever is higher. So that is the penalty for not disclosing. That underscores the importance of keeping accurate record and reporting the same to the tax authority. So I think one of the ways that tax payers can actually ensure this is to keep to maintain an accurate, detailed record. You know, as at when they're happening. Like, so, can you hear me? Can you
Yes,
hear
we
me?
can hear. Yes, we can still hear you.
Okay, so I said one of the ways that tax can ensure that they achieve this accurate reporting is to maintain records, and then to make sure that these records are maintained in what we refer to as contemporaneous base. At the point of the transaction, you are keeping those records. For example, those of us that worked in certain organizations where you are meant to retire whatever is given to you as an advance. Let's suppose you want to travel, and then the office will say, okay, because of the time constraint, okay, let's go, we'll give you an advance of, let's say, 1 million naira. Okay, that this 1 million will cover your travel, your transportation, your and all of that. So your feeding. So whatever you have done, at the end of the day, you're going to retire them and return balance. So retiring them means that you're going to be conscious of everything you're doing, and everything you want to ensure that there are documents for it. So when you get the hotel, you tell them, okay, I need an invoice at the end of your stay. They should give you an invoice to show that, okay, this is the amount you spent in the hotel. So at the end of the day, you'll be able to provide all of this to be able to retire that particular sum. Otherwise, if you're unable to provide those documents, then of course you will have a lot of liability to deal with. So that is important, keeping documents as at when the transactions are happening, so that when the tax authority requests for them, it's easy for you to share this with the authority. Like what we see usually in practice is that we see a lot of fire brigade happen. Like taxpayer, the moment you make request, that is when they will begin to run helter-skelter. Yeah, so they begin to run helter-skelter looking for how to come up with those documents, because I've been showed they didn't maintain those records, as at when they're supposed to maintain it. So suddenly, you also, so you're also expected to gauge. It is allowed even within the context of the Nigerian tax system for you to engage tax professionals that will enable you or assist to make your recording file and all of that easier, in order to fulfill your obligation. So it is something tax usually, especially in the transfer price, that it's a whole lot of technicalities. So
Thank you.
to
Paulinus.
ensure that you keep those records. Then periodic evaluation. Just take. Can you hear me? Stable connection.
Yes, we can hear you.
Hello, can you hear me?
Yes, we can now. Yes.
Yeah. So yeah.
Oh,
So
okay,
I
we
don't
can
know
hear
at what
you.
point I don't want at what point I started breaking, but I mentioned the first point was to ensure you keep contemporaneous documentation as at when the transactions are happening. Secondly, you ensure that you engage, if the need be, you engage tax professionals or transfer pricing professionals to guide you to provide these documents, or to keep these records as at the format which is required by law. Then the third one I was talking about was for taxpayers. It's also good for them to also engage in periodic review of transfer pricing documents they have, records that they have, so that at the end of when audits or when the tax authority comes knocking, it's easy for you to put them together rather than using what we call delay tactics, because that is what we're experiencing in practice here. You may be with the taxpayer, and the moment the taxpayer starts delaying unnecessarily, that could begin to give us an indication that there's something fishy somewhere. And even if there is none, but again, behaviors are something that we take seriously. So if you have nothing to hide, like we say, you should be able to provide those things. Like if a policeman stops you, I keep using an example of this traffic officers or police officers. If they stop you on the way, because these are things we are familiar with, see every day. So if they stop you on the way and you tell, I remember there was a day I forgot my driver's license at home. So I had a driver's license, a valid one, but I forgot it at home. So I told the police officer that I have a driver's license. He said, where is it? I says at home. He said, as far as concerned, I don't have a driver's license. So because I did not provide it when I'm expected to provide it. So it's at that spot that I'm expected to provide it. So I'm not expecting to follow me to my house to go and be checking my driver's license or checking my vehicle particulars. So I mean, that is more like what we looked at. So by the time you start buying time and doing all those unnecessary delays, there are requests for extensions that are very valid, and even the regulation provides that, of course, when there's a reasonable ground for asking for extensions, the tax authority is expected to see to it. But where we see things that are more like playing to the gallery, just to buy time. So that also increases the risk, on the part of that player.
Thank you so much, Dr. Paulinus. Thank you so much. I mean, just like you said, all about the attitude that is put forth from the corporate entity of the individual. Thank you so much for taking us through the process and that which is required of us. I would, because of our time, we'll be taking some questions and we might not be able to address some other questions. Please remember to still scan the QR code on the screen so you can follow us on our social media platforms, YouTube, Facebook, Instagram, WhatsApp, and Twitter. So please scan the QR code. You could also send your questions to our WhatsApp channel. We'll take all your questions. We are willing to take them. We might not be during this panel session. So we have just 2 to 3 questions left because of our time. And so I'll be directing this question to Dr. Paulinus still. And it's going to be on our onboarding, because we know that one of the reasons why we are having this session is because there's a requirement for us to migrate to the Tax Promax platform, for filing of our transfer pricing returns. So we'd like to ask Dr. Paulinus Iyika that how do we onboard as a taxpayer on the Tax Promax platform for filing our transfer pricing returns? Is there any application required that we need to download? Is there a particular button we need to click on the Tax Promax platform? Because, as I maybe yesterday, I know people still said they did not see where they are meant to file their transfer pricing returns on the Tax Promax platform. We don't know whether it's because it's still new, it's being worked on. How would you be able to onboard? We just really like to know, because there's a timeline for this. So we'd love to know how we can onboard on the Tax Promax platform for filing our transfer pricing returns. Thank you, Dr. Paulinus.
Yeah, so thank you very much. I mean, for me, it's a very key question that in this whole webinar. So how does the taxpayer jump into the train, right? So there are 2 categories for this purpose of this question. I categorize the taxpayers into 2. So for those that I'll start from those that are already existing. Those that, when I mean existing, they're already in the transfer pricing nets, not just the tax net. You can be in the tax net, of course. You'll be filing your tax returns in the tax office, but again, you're not filing transfer pricing returns. So for those that have been in the filing transfer pricing returns, those are called the TP nets. So what we're doing currently is that we are injecting the forms to them on Tax Promax, to their profile. I mean, they already have a profile on Tax Promax. So we're injecting those forms, those TP declaration and disclosure form to them on their already existing profile. So all you need to do is to go there and then do the needful, just fill those forms and then submit. Then for those that are new, like those that have never filed, because this whole amnesty program that we talked about, which is the migration to tax formats, one of the objective is to bring in new people, new taxpayers that have not been filing, to take advantage of this opportunity, right? So if you fall in the category of the second, which is those that have never filed before, so what you will need to do, you need to use this email. This is transfer pricing at firs.gov.ng. You can send an email to this. You can send your mail to this particular box, and then just requesting that we should inject the forms to you, and then that will enable us to do that. So, so in that way, of course, you'll be able to file your returns. So I mean, like, I don't know, let me just recap again. For those already existing, we don't need to send mail to us, right? We're already injecting the forms. But for those that have never filed before, in CPNet, and they're just fulfilling the obligation, but in accordance with the law, and those ones now send us an mail to say, look, I am filing for the first time, and then I need to be onboarded. So in that case, we'll then do the needful to ensure that you file. So I think those are the two categories. Yeah.
Thank you so much, Dr. Paulinus. So I think we've gotten a clarity. We need to fill a form if we are just moving to tax format, so that our details can be injected into the platform. And for those that are new to filing their returns, there's also a requirement for them to fulfill. Thank you so much for taking us through that process. We still have some questions similar to this question, but a different perspective that we'd like to get a response to. So we'd like to know if there are any common pitfalls amongst taxpayers, or pitfalls that taxpayers should avoid while trying to file their transfer pricing returns on the tax formats platform. So are there known pitfalls that you would like to tell us as taxpayers to avoid, so we do not jeopardize the essence of migration to the tax formats platform, and so that the essence of migrating to the platform as well would be fulfilled? Okay, can you hear me, Dr. Paulinus? Because I can't hear you. Okay.
This is quite. Can you hear me? Can you hear me now?
Yes, I can now. Thank you.
Okay, sorry. So like I was saying, I said it's a very important question, because it's our goal to ensure that people take advantage of this particular window, and then we're doing everything possible from our own end to ensure that taxpayers are able to take advantage of the window. So one of the things I would say in terms of pitfalls is that taxpayers, while filling the form, will just always bear in mind that the way the form is designed, that first of all, there are fields in that form that may require just a text. Some of the fields require numerics, some are alphanumerics, right? So meaning alphabet and the numerics together. So all of those things are built into the field. So when you're filling the form, some people complain. A lot of feedback we've gotten is about error messages, and all of that. So some of these error messages we've found out is actually associated with this kind of mistakes, where you put alphanumeric, or let's say put a dash. Maybe some emails will have underscore, or maybe a dash. So you want to put a dash where it's supposed to go, the form expected to put a text. So that dash is considered to be, so it could trigger that error message. So another one that taxpayers want to bear in mind is, of course, the issue of sequential filing. For example, if you are filing for the first time, or you have multiple years that you want to file for. Let's say you are filing for 2024 year of assessment, you are filing for 2023 year of assessment, for example. So if you file 2024 before 2023, it may become difficult to file 2023. So it's like it's expected that you file them in sequence. So even though, I mean, that's even what the law understands. It understands that you can't file for the future years and you'll not file for. So it's like you can't do tomorrow before today, something like that. So, but again, those are things that we're also trying to also discuss with the ICT team and to see how some of these things can actually be minimized or perhaps changed, if possible, such that we could make the system a lot more flexible and user-friendly. So those are part of things we're doing. So thank you.
Thank you so much. Thank you so much. Thank you, Dr. Paulinus. Okay, so before we move to our next question, I would like us to know that we can still scan our QR code to follow us on our social media platforms. We would also be displaying the email address for the first-time registration, just like Dr. Paulinus talked about the email address. Then the email address for the support text as well. We'll be displaying it on our social media platforms. So please ensure you follow us so that you can enjoy this benefit, not just to follow us and then we'll be silent about today's webinar. So please ensure you do that. So we'll be sending that email across to us all on our social media platforms. Okay, I think I just have one or two questions left, Dr. Paulinus. So we'd like to know that for the tax office, would there be a period wherein which manual filing can still be accepted from taxpayers while we are facing certain unresolved issues with filing on tax formats? Like, we know that this platform is new to some persons and it's also relatively new to some other persons. So we'd like to know whether we could, for the tax office, would there be a period where in which manual filing will be accepted? And if yes, will the waiver of penalty still stand even if we are obviously facing some unresolved issues? We know that sometimes tax formats platform might have network issues. Sometimes people might not be able to upload due to maybe certain persons or load on the website. And sometimes maybe the website is being worked on at the back end. We'd like to know whether there might still be an extension of the waiver, or will the waiver still stand for people that will also be filing manually? We'd really love you to help us address this.
Yeah, so thank you, Anu. I quite understand the frustration that comes with trying to file your returns, and then for one reason or the other you are unable to file, and then that's usually we want to trigger as a human being, you want to explore the options, especially where there's a penalty that is potentially there. So from the point of view of the FIRS, we have migrated fully to automated platforms. The first time we migrated was around 2021 when we introduced the electronic transfer pricing platform we refer to as ETP plats. So from that moment, we made it clear that manual filing or filing via email is no longer going to be accepted, or it's no longer acceptable. So, that is also applicable in this particular instance where we're talking about tax pro max. So we're not looking to receive any manual filing from any taxpayer in lieu of that electronic filing. So what I would say is that there's always a way to demonstrate that you are unable to fulfill the obligation, and then maybe by providing certain evidences, like we have this is a technology age or internet age where you can easily screenshot a platform to show that there are issues that were encountered, or to show some sort of evidence that you faced while trying to file. And again, the system has a way of also showing logs. We could also see some logs of various attempts. And so those are things that we could evaluate to see, okay, to see genuine attempts to file. and all that. So these are things that we're looking to explore rather than going back to manual, because people will easily run back to manual filing if we open that kind of opportunity. So that's where we are for now. So every filing is expected to be done on Tax Pro Max.
Thank you so much, Dr. Paulinus. Thank you so much for this session. A very big thank you to our panelists. And before we round up the session, I would like to inform us all that this is a place of reaching out to our corporate entities, reaching out to our CFOs, for us to be able to maximize this grace period that has been granted to us for transfer pricing regulation, and for all the specific actions that are meant to be taken, including our documentations as taxpayers. So this is the period in which we should, reach out to everyone concerned to be able to maximize this period. And also, I know that while we're trying to fulfill our obligations, there might be one or two hiccups while we're trying to do that. I would like to remind us that this is one of the reasons why we have this webinar session for us, so that things can be seamless. And this is why we have also a representative of our tax authority here with us. So once again, thank you so much, Dr. Paulinus Iyika. Thank you so much. We are indeed grateful to have you on this platform. We are grateful to have you take up our questions. We are grateful again to, we are just satisfied that these questions were satisfactorily answered, and we are not more confused than we came. We have clarity, and it's been a very, very insightful session. Another thank you as well to Emmanuel Olalekan. I mean, the delivery was apt, it was succinct. It gave us exactly what we needed to know, the background knowledge we needed to have about transfer pricing. Thank you so much. So we will still be here, and we'd like to take a little closing speech from Dr. Paulinus Iyika. I know that you might want to share one or two things with us in a minute. So Dr. Paulinus, please, let's have you.
All right, so okay, it's okay. More like a closing remark, right?
Yes.
Oh, I didn't get.
Yes. You're still here, but we would like to a closing speech for us. Thank you.
Oh, okay. So I think I will just want to thank you to the Cardinal Professional Services, of course, and in particular Emmanuel and Emmanuel Olalekan for organizing this, and the other members of the team for organizing this particular webinar. I think it's something quite important, because we actually always want to use such platforms to reach our teaming and esteemed taxpayers, to be able to encourage them to comply with the law. It is a collective responsibility, just like they will say, your security or safety is first of all your responsibility. So we, in this case, we are saying that it's a collective responsibility to ensure that we build a nation, right? So Emmanuel said at the beginning that the objective, one of the objective or goals of taxation generally is to be able to provide revenue for government to fund the various programs that government has, starts from road networks to other infrastructure like bridges, like hospitals and all of that. So all of those things are things that government wants funding to do, or need funding to actually execute, and it's not peculiar to Nigeria. So it's a global thing. All over the world you go to, for those that have jackpot to other countries, for example, if you ask them, they tell you what they also face. Before you get your paycheck, a lot of taxes would have been removed, and even other ones that you're going to pay along the line. So they're tough. This applies everywhere. Find those places you can't even escape, in the sense that there are a whole lot of architecture put in place to drive the compliance. So by way of closing, I want to say a big thank you to once again to the Cardinal Professional Services and to all the participants as well for taking our time to attend this. So we also, as the service, we're also looking to organize some sort of sensitization webinar like this, maybe in the coming days, where we'll be able to also practically go into the tax marks and then see how we'll be able to point out areas that will be of importance to the taxpayers and probably address all the challenges, or to some extent the challenges that they are facing in compliance. So that's something we're trying to work out in-house, and then I'm sure that will also be made public when the time comes. So with these few comments, I think I want to say a big thank you once again for all of this. So thank you and God bless. So I don't know, it appears that there are no questions from the audience.
We would actually be addressing the questions on our channels. That's why we are really, putting it out
Okay.
there for followers. So we'll address the questions. If more questions come up, we'll be addressing them. Also, from Emmanuel, I don't know if Emmanuel is here now, but I can see his message. So thank you so much, Emmanuel Olalekan. Thank you for being a panelist on this session. We are indeed grateful for sharing your insights. Thank you so much. And we would like to say that, this is our first webinar to us, yes, and we'll be having more of this series, more of this session to address contemporary issues and, to make the corporate world easy for every one of us. We also love you to know that this is to our participants. If you're having any form of ECOP, if you're having any form of challenge, in filing your transfer pricing regulations, returns on the tax form as portal, if you need any form of support, during the migration, or even to ensure your compliance and to ensure you're doing the right thing. We initially said you need to plan, and then planning is not what you're going to file, what you've planned to file. So you don't look like you're not prepared when it's time to, put your filing out there. You can reach out to us, via email. So our email is enquiries@cps-llp.com. It will be put in the chat box for us if you want to send emails to us. The basic thing here is we are committed, to adding value to the society, and in several leadership meetings, and that's one of the reasons why we are here today. And if you scan the QR code to follow us on our social media platforms, you would also see that there are publications, from CPS. There are articles that would benefit, you as a corporate entity and you as an individual, or you as an expert in your area. We love you to go through these publications because they have great benefits to you. And apart from these publications, we also have, our weekly roundup, which, highlights the weekly regulatory provisions for us in the finance and corporate sector. We'd really love you to, make good use of this that are on our platform. So please scan the QR code and follow us on our social media platforms. It's been an amazing time having you here. It's been an amazing time. It's been insightful. Thank you again to our panelists, and a very big thank you to our participants who made today a very good one for us. And we like the fact that we got questions, we got interactions, and we're already seeing interactions on our social media page. And trust us that we would not end this webinar here. It's not just going to stop here. We're also going to be entertaining your questions as we promised, and you'll be getting answers to them. Thank you so much. But for easier communication, you can send the mail to us, and you will be seeing the mail in the chat box now. So thank you so much. We have some questions that we are not able to take right now. We'll take them in our, probably maybe our WhatsApp channel if you drop them there, or any of our social media platforms. Thank you. I don't know if Emmanuel Olalekan is back on the call. I think the network is doing a bit. But if you're here, please can you unmute Emmanuel? Just give us a second to confirm that. Okay, so I would love to say once again, thank you. And this will be the end of the webinar session. Thank you. And we would really love to have you once again. We would also be sending mails to you as reminders. If we have, our webinar coming up in the next 3 months, we'll be having another series coming up. So expect our male experts to come with something insightful, a good topic that you really want to learn from. And I can see, comments in the chat box, appreciating our panelists for really dissecting this topic. Thank you so much, our panelists again, and thank you so much to our participants. And we hope to see you in the next 3 months. Thank you so much. Dr. Paulinus Iyika.
All right, thank you, everyone. Enjoy the rest of your day.
Enjoy it. Thank you. Like I said, thank you so much, everyone, once again. I will see you in the next 3 months. Oh.
Apologies, I know I had a technical glitch with my internet, but I can see that you have already released your audience. I think that was a great outing, and thanks to everyone that joined to make today's webinar a success. Thank you.